Welcome back to the market. Let's get into conversation with Amnish Aggarwal, the head of research at PL Capital, to get a better understanding on where the markets are headed, what to make of this sector churn that we're seeing. And Amnish, hi, thanks for your time today. Good morning, first of all. And exactly that, right? Amnish, give us a sense of where you are seeing all this sector churn leading to, because like Kunal was mentioning earlier, the cuts that we've seen in auto yesterday, despite that, autos continue to look good. Is that the case fundamentally as well?
Yeah, hi. You see, what has happened is that, including, say, auto or some of the consumer segments, because of the cut in the GST and anticipation in the improvement in demand, we have actually seen significant run-up in the stock prices. In certain cases, if you look at past 3 months, the stock might have run up even by the extent of say 20-30%. Now, what usually happens is that after that the stocks might correct a little bit or consolidate, because there is always a gap between the news and the actual delivery. Because now the implementation of GST in terms of their actual, you can say, reduction in the prices, how does it translate into volumes and all. So that is something which is going to play out. So the initial, I would say, your rally in many of sectors which have benefited from GST. So at the present one, it might seem that many of the stocks they have run up quite a bit. So they might undergo some sort of you can say consolidation, sideways movement, or even little bit of correction. Once the numbers actually start coming in, because today it is very difficult to pencil in any change in the estimates also, because it all depends upon how much of a price correction is there, to what extent it is able to ignite the demand. So I think over a period of time, we will see even the earnings estimates of the various, you can say, analysts also going up, and also the street, and then maybe the second round of increase in the stock prices of some of these stocks will happen. In I would say the medium term, some of these sectors, they continue to look good. In the near term, as I said, there might be little bit of weakness and more sideways movement and consolidation.
All right, so that's about the auto pack. But Amnish, one of the sectors that is once again showing good momentum is actually the defense pack. Look at the move in BEL, even Mazagon, HAL. These stocks were flying high yesterday. And Amnish, after a while, we are seeing the defense is making a comeback. What, as per you, could be the likely triggers? Is it only the valuation comfort, little bit of valuation comfort that we are getting to have right now in these counters, or it is more has to do with the global uncertainty that we still have, because day in and day out we keep hearing with respect to what's happening on the war front, not in India but the globe across. What is your own sense on defense pack?
You see, defense seems to be a very structural story to me, because we have seen in the past few years how important is to have your local defense industry, how you need to promote them, and that is where the government initiatives have been over the past 5 to 10 years, and it is now getting reflected in the order books as well as growth of many of these defense companies. Now, I think the defense stocks, particularly you can say after middle of May, they had rallied quite a bit, and after that they have undergone consolidation from the last couple of months. Yes, there has been a little bit of doing that consolidation correction. The outlook on them in terms of the order books, in terms of profitability growth, that remains, I would say, pretty decent. And near term, there could be, you can say, excesses on both sides. But in the longer term, if you are taking a 2 to 3 year view, defense stocks seem some of the more structural bets which are available today in the Indian markets.
Okay, so that's the take on the entire defense pack. But let's get stock specific and talk about some stocks that could be in focus today on the back of their individual news flows. And where should you be keeping a very close eye out today? And Sharad is here. He's joining us this morning to give us a list of just that. Sharad.
From the mid-cap space, Tega Industries is in focus, and a very large acquisition has been reported by the company, and this acquisition is almost $1.5 billion. The company will be acquiring Molycop, which is the world's largest grinding media supplier, and they will be acquiring with Apollo Funds. Company will have 77% stake, while Apollo Funds will have almost 23%. The deal itself, the valuation coming at only 8.6 times its FY26 EBITDA levels, which is at a very steep discount when compared to what Tega Industries is trading at. The funding, of course, would be coming in via debt, and almost a 2,200 crore equity raise, and this could be via QIP preferential, and also promoter participation would be there. It's interesting development for Tega Industries. Also, Dr. Reddy's Lab, slight positive news flow expected as the company will be acquiring Stugaron for almost $50.5 million, and this will give access to 18 markets in Asia Pacific and Europe, Middle East and African markets, and this will also strengthen the central nervous system portfolio for Dr. Reddy's. The shipping corporation, the company will be taking a physical delivery of a second-hand, very large gas carriers. It augurs well for the stock, while RVNL also received a Western Railway project and was the L1 bidder for roughly 170 crores worth of order. We might see the railway stocks buzzing in trade as well. And also from the pharma space, another important news flow coming in is Biocon has inaugurated its first manufacturing facility in US, and it is an oral solid dosage facility.
All right, thank you so much, Sharath, for getting us all those details. So yes, of course, Tega Industries, that is going to be the key one to watch out for. But Amnish, given that it is such a big acquisition that the company has done, we were just chatting about that given the market cap of Tega Industries, they're acquiring a company which itself has that revenue similar to that number in just 1 year itself, but along with that there's a debt caveat as well, which can now be visible on the books of Tega Industries. Amnish, any thoughts here that what can it mean for Tega Industries in particular, and if not taking cues from that, what can it mean for the overall mining sector?
You see, we don't have any firm view on Tega Industries as of now, but having said that, the company has done well in the recent past, but one will have to go into nitty-gritties of this acquisition, that how much is it debt, how much is the profitability of the company which they have acquired, and what is the likely shape of the balance sheet and overall cash flows going forward. So I think these could be some of the factors to look for in Tega, but beyond that, I think very difficult to give any firm view for me.
Okay, so that's the take coming in on that acquisition. And remember, this is a very big acquisition coming in for Tega Industries, and on the back of that, the stock could be in focus today. But which other stocks are important to watch out for today? Ashesha is joining us with a list of all of these other stocks that could also be in focus today on the back of their news flow. Ashesha.
Well, yes, let's start with the defense sector, and Mascot Dock in particular will be in focus today. This because company has given an important clarification to the exchanges. Remember, this has been the buzz for the stock for the last several months, and the company now says that negotiations with the Indian Navy with respect to submarine project P-75 have now begun. Remember, last time the company has said that no clarification or no communication has been done with Indian Navy, and hence this is an important clarification to the exchanges. The stock in focus on the back of that. Jupiter Wagon on the back of some new order wins that have come through. In fact, the company says that they've won orders worth about 113 crores. This is for bogies from Ministry of Railways, so keep an eye out on this counter as well. Meanwhile, Economic Times has reported, citing sources, that tweak in rules could actually stall 72,000 crore of investments in solar, and on the back of that, the entire ecosystem will be in focus today. The stocks, the likes of Vari, Vikram Solar, Premium Energies will all be in focus on the back of this negative news flow coming in for these stocks. Meanwhile, Shyam Metallics on the back of some expansion plans where the company says that they are looking to enter into crash barrier manufacturing. This will be to support road and rail safety. And the company also says that they are eyeing market share of about 8 to 10% in FY26. So some expansion plans coming their way, and Shyam Metallics in focus on the back of this.
Okay, Ashesha, thanks so much for taking us through that. Somil, want to come to you and get your view on some of these railway or railway-related counters. Ashesha was talking about Jupiter Wagons have received an LOA for 113 crores from the Ministry of Railways. Before that, Sharath was also highlighting RVNL. They've emerged as the lowest bidder for a project worth 169.5 crores from the Western Central Railway as well. So news flow coming in for both of these railway counters. But Somil, what's your take on the overall railway pack? Which stock is looking more attractive from either core railway or railway manufacturing? What's your sense over there? Somil, could you please unmute yourself?
Apologies. I've had a look at the railway pack, and all the stocks are looking great. Titagar has already broken out of a triangle pattern. IRCTC has already started making high tops, high bottom, closing about 20 daily moving average. So these two stocks are definitely broken out of their ranges. I'll still wait for RVNL and other stocks, but my picks would be Titagar and IRCTC. The best risk reward ratio at this point of time would be with IRCTC, where the stop losses are around 705. And I think the targets on the upside would be 740 in the very short term. I'll wait for the medium term breakout, but at this point of time, 740 would be short term targets.
All right, so that's the day coming in on select railway counters. Let's watch out for that. But moving on to an exclusive then, where government is actively pursuing the revival for HMT and chairs a high-level meeting to discuss the operations and explore avenues for revival. My colleague Sameer joins in with more details on this one. Take it away, Sameer.
Centre has been actively pursuing for the revival of HMT Limited, the public sector undertaking, and in the same direction, the Union Minister of Heavy Industries, H.D. Kumaraswamy, held a high-level meeting with the Minister of Railways, Ashwini Vaishnav. Both the ministers discussed the current potential of HMT Limited and exploring the new avenues that can help to revive the financially stressed public sector undertaking. But we are also getting to know that both ministers also discussed that what could be the new avenues and also how railways can contribute by giving new order books to HMT Limited, and that if railways supports or give any new order book to HMT Limited, that will definitely boost the overall operational performance of the PSU and also provide financial stability as well. The ministers have directed the officials to come up with a concrete roadmap, to come up with a concrete plan that how the overall performance can be further improved, and also to utilize the HMT's potential, whatever the strength that HMT has got, how it can be utilized in a better way. If we see the larger picture, HMT, the 3 units which it has got, it includes one Ajmer, Pinjore as well as Kalamaseri. So of the 3 units, Kalamaseri has shown operational profit in last couple of quarters, and this unit can actually contribute for the defense and the railway sector. That is what the government is eyeing for. And from this particular unit, the government understands that from here, it can get a significant order from railways, from the Indian Railways. So seeking that in mind, both the ministers chaired a high-level meeting. We have also seen that in the recent past, a technical committee has already been formed by the government under the member of Niti Aayog that will come up with a detailed roadmap that how the assets, how the land which is there with HMT, it can be monetized and used for not just improving HMT, but it can further give a push to Make in India initiative, and how HMT can further contribute not just for Indian Railways, but also for the defense sector.
Okay, thanks so much for taking us through that, Sameer, and we'll keep you updated on any developments on your sense on IT, because we've seen internal mix coming in from that sector as well, because on some days, especially the day when we heard about Infosys, you had the large caps that were doing very well, but just yesterday the mid-cap IT names were also seeing a very solid uptick. What's your take on what could be driving the next rally within the IT space?
You see, in terms of fundamental, if you look at the growth rates of the companies, there is nothing exciting which is happening as of now. Whether it is, you can say, your order flows, or whether it is the impact of transition from AI. So all these uncertainties are there. But having said that, the valuations in many of these IT names, they have become very supportive. That is one. Secondly, the IT companies generate a lot of cash, and many of them offer very good dividend yields, ranging from say 3-4% easily. So for many of these large names in particular, the attractive dividend deals and the valuation, which are at least I think some 4-5 year low kind of a number. So these have been the 2 trigger points, and I think the buyback of Infi has just, you can say, it has added some sort of cushion to what the thought process was. So that is resulting in some sort of a bounce back which is coming in the IT stocks from the lows. But in terms of the fundamental visibility, is there changing anything? I think it will take some time for the fundamentals to improve from the current levels.